It's wonderful to welcome you here in Davos at this venue that we have the privilege and the opportunity to put up, to bring a bit of the South African warmth to Davos. I'm sure downstairs you'd have seen that we've even managed to recreate some of the blue sky and the sunshine of South Africa in Davos. So a warm welcome to everyone. Before I invite the President to walk us through the progress we have made in South Africa in the last 12 months, or actually less, in recreating and getting back the South African economy to a path of renewal and growth. And the President has been speaking a lot about that in Davos in the last few days. I thought it would just be a good opportunity to make a few very short observations, particularly since we've observed in Davos in the last few days too, that the mood this year is distinctly different to the mood in Davos this time last year, just a year ago. A year ago, the mood in Davos, Mr. President, was one of optimism. The mood this year in Davos is one of caution. In fact, it's one of concern, of worry. And there's reason why there is a mood of worry. There's a mood of worry because of the trade wars, because of the huge amount of risk that permeates the world out there. This is also reflected in the latest forecasts of the IMF, which have seen growth being revised downwards, and as for the global economy. And as we enter that particular era for 2019, we in South Africa have a unique opportunity to make a renewed commitment to pursue the path of renewal and growth. And I think when we left South Africa last week and we got together as South Africans, as the business community with government, and before that, business community, government, labor, and the community, to talk through what it is we needed, how much we needed to do, and how much we've achieved. That sense of community, of collaboration, of working together, which is, as the President has been saying so many times in Davos in the last few days, that's been very much part of our DNA. That commitment to that growth, to working together, I think is part of the search for the way the world needs to do things. And if we are going to stay on that growth path, and we are going to deal with what is the theme of Davos this year, which is Globalization 4.0, I think South Africa can actually contribute to that global debate in a different way. I think the last year has been a year of delivering on many of the commitments, Mr. President, that you had made. I think we have to recognize that we had 9 years of really, I suppose, destruction of institutions, of things that were not things we should be very proud of. I think the commitments we've made and have delivered on have put us on a very strong path to achieving the growth and stimulus that the economy needs in order to address the real deep concerns of unemployment, inequality, and joblessness. On that note, I think the President is going to address us on what lies ahead, on how we build on the foundations that we have already set, and how much is required from all of us. Certainly in my interactions with business people across the length and breadth of the global economy in the last few days, there is huge amounts of interest in South Africa, in what we can achieve, in what the opportunities are, in what we are doing, in the commitment and the transparency with which we are tackling the issues that face us. And I think a lot of the times we as South Africans take things for granted. The transparency within which we are dealing with the issues of corruption, the fact that all of our presidential review committees and summits are, have been very public, very successful. But those are all things we have a responsibility for making much more visible. We have a lot to build on. We are here. One of the reasons we are here so present as ABSA this year is of course because we wanted to be here as a corporate and present, but we are also here as ABSA, as a proud South African brand, as a proud African brand, to support our country and our continent and to show that we, as South Africans and Africans, have something to contribute to the global economy, and we will continue to do so. So, Mr. President, over to you.
South Africa.
Well, thank you very much.
There's you.
Thank you very much, Nzinga. I think that the work that we've been doing on investment, as the President was indicating, has got a number of legs to it. And some of it has been to address the policy issues. Some of it has also been to try to make sure that where there are regulatory decisions that are required, where somebody needs a permit for something, that this is a quick and improving process and doesn't end up as a big blockage. And we've established for a few years now, but it's really gathering momentum now, a one-stop shop called Invest South Africa, which sits with, in its physical office, sits with representatives of a number of departments. So if there are issues of visas, which as the President acknowledged is still, I think, administratively and practically a challenge, where there are issues like that, work permits, environmental impact assessments, things that are involved in other government departments, there is a ready communication, and I think more than that, an overall message that what is required is that time is of the essence, and that is reduced. And then we have a number of government programs, sectoral, many of them, but also generic, which offer a range of incentives for investment. They range from the generic program called 12I, that's part of the tax code, which allows for new greenfield and brownfield investments. There's a tax benefit. There's special economic zones, which we have across the country, which we're now rolling out on a larger scale, and they are actually in a number of locations and around a number of different sector themes. Some of them are the later ones have been around renewable energy manufacturing, for example. Those also offer, well, there's a number of incentives that go along with that, including tax incentives for the investors, but also the infrastructure, which government is contributing towards, including the top structure, which our department is. And then there are sector-specific programs like the auto program, clothing and textiles, and others. So there's a very, I think, attractive and competitive suite of incentives that we offer, and we have that information available and packaged, which we supply to investors. So this is all part of, I think, the exercise of working to improve the investment environment in the country. I think we've seen a tick up in overall confidence, definitely reflected in the figures. The figure that came out the other day was not by South Africans, but by UNCTAD, United Nations Conference on Trade and Development, and their investment division. And they pointed out that in 2017, we got $1.3 billion of foreign direct investment, and that went up to over $7 billion last year, which is a 450% increase. So that's a significant uptick in foreign direct investment, and that actually is the smaller part of if you want to translate the 290 billion rand into dollars, that's $20 billion. That's $13 billion that is not foreign direct investment, that's direct domestic investment. So I think that we can see that there is a turnaround in the investment climate in South Africa, but much more to do. And our agencies and departments are all working to try to improve yet again on what we have at the moment.
Nonkululeko, often when we speak about big companies and how they can contribute to South Africa, I'd just like to know what the Johannesburg Stock Exchange is doing in terms of interacting with smaller businesses, as we know that SMEs are a big driver of jobs and growth in South Africa as well.
Sure, thanks very much for that, Nzinga. Excuse me, I think it's very well known, certainly amongst global emerging markets players, portfolio managers and the like, that South Africa tends to be a capital market that favors big firms. That's where most of the portfolio flows tend to be directed, and there's a reason for that. The reason is purely liquidity. People can come in and out as they please. We provide quite a deep pool in our market that attracts that kind of trading for portfolio flows. So that's all well and good, but we do live in a country where one of the important levers of growth, economic growth that's been identified for a long time now, is the SME sector. So a number of years ago, the JSE launched an alternative platform for listing small firms. And the problems we're trying to solve in doing that were twofold. On the one side, we're quite an expensive market. And we're an expensive market because irrespective of where you're located, you do have to make the IT investments that keep you at the cutting edge of technology platforms around the world. So that is an expensive infrastructure to keep up. So if you want companies that perhaps are not so mature to come onto the market, the one thing you do have to look at is your cost structure. So that's the first thing we did, was to lower the cost structure for SMEs. The second part is, apart from the actual rands and cents, there is also a whole raft of listings requirements that tend to be quite heavy duty on compliance and filing and information. It's quite a process to get a company listed on any capital market in the world, and it has to be, because the lifeblood of a well-regulated capital market is disclosure. Buyers need to be aware, investors need to have a very good sense of the risks that they are taking on board in getting involved with your company. But very often, small companies told us they just simply did not have the wherewithal to assemble all of this. So we did lower the listings requirements for this sector of the market, and said so. So anybody who comes and invests in what we call Alltax comes with that knowledge already that this is the smaller end of the market. You do tolerate a certain degree of additional risk, but presumably that also gets rewarded by higher returns. So that is how we've moved forward. And in our minds, actually, apart from the fact that this is now giving a platform for smaller companies, sometimes far more productive users of capital, to access capital pools, we also will be creating a pipeline for ourselves for the future, because as these companies matured and met the hurdle rates to list on the main board, they can be our feeder channel to the main board. And we've seen that. We've seen that over the years. A few of those have migrated to the main board. There have been lots of mergers amongst those smaller caps. But if I were to be completely candid, it has not had the kind of traction that we were looking for. And that has a lot to do with the investor base. We do have, in South Africa particularly, an investor base that just does tend to prefer larger firms in the first instance, as I said. But also the ecosystem that is required to support the smaller base has not actually really taken off. And what do I mean by that? In order for people to come into certain stocks, there needs to be a lively, I think, band of analysts that cover that stock, that publish research, so people get to know a little bit more about the particular stock. And our analysts just don't cover SMEs that are on Alltax or for that matter on any other market. So there is work to do. We don't just say, here's a platform, do whatever you like with it. We do want to just sort of push a bit further in making sure that the capital pools do start to flow much, much more meaningfully into the smaller end of the market.
Okay. Adrian, you've described South Africa as a
GDP we've lost. Despite that, I'm convinced with deep conviction that the potential of our country is great. For sure, under our president, things are changing quickly. We're turning in every regard, and I think to give credit to the president's leadership, we are doing things, I think, remarkably quickly and firmly towards moving the country in the right direction. But I would say to you, it's interesting. I'd like to make a case maybe for potential progress, robustness, and I think relevance of our economy. And just maybe a few points I'd like to make. Firstly, largely anecdotally, our own company, Discovery. We built an organization organically, coincidentally right from the end of apartheid, like the early 90s till today. It's a company that hires 12,000 people. a revenue footprint of $10 billion, and entirely organically grown. Now, I don't make the point as an advert for, this is not an investor presentation, right? I'm really making the point that we built it out of South African skills, out of people that came out of our universities, complex skills of actuarial, clinical, technology. We used the capital markets to fund the growth, and 80% of its value is in South Africa. So we used the deep scale of our markets to build the company. And now, as part of the President's drive, we'll be investing, I think, $1 billion or so over the next 5 years in the country. So as an anecdote, just our company is a good example, I think, of what can be achieved off the base of the wonderful people, of the skill set of our country. The second point is maybe just to make, and I hope this isn't controversial, I mean, we have had a very difficult time, and I am convinced of what we can do in the future. But we are, I believe, framed very badly, you know, in how people see us. It's just anecdotally, when I speak to people here in Davos, I get questions like, will things be okay? You know, are we going to grow? There's this constant kind of binary mindset about South Africa. I think it's grossly, grossly unfair. If you look at the data, the progress that we made, despite a very difficult decade, is remarkable. Our GDP is higher, is 30% higher in dollar terms per capita. I don't think people actually know that since the mid-90s. We're dramatically bigger in scale. Life expectancy is 10 years higher. Infant mortality, I think, is 30% lower. Even terrible things like our murder rate is 50% lower. LSNs 1 to 4, I think, is halved. So in every single category, progress has been made. You have to look at the data. And it's amazing, you ask people, just anecdotally, do they know this? They generally don't. They're caught by the framing of the country as something that is not making progress, is meandering around. So if you can take that base with the President's leadership and what he is trying to do, I really feel very optimistic about what we can do. The second point maybe is just the issue of risk. I also get the impression as a business leader, there's a constant worry of risk. Risk is volatility, right? Risk is variability. As a statistician, risk is standard deviation, right? If you look at our GDP growth rate, you look at the variability of it. If you actually do the analysis, you will find it's remarkably robust. So when people talk about the country and it's risky, the truth is GDP growth rates are too low. We have to grow faster. We know that, and I believe we will do it. But ironically, we've dipped, I think, negative just a few times in a very small number. The stability of our GDP is remarkable. So there's kind of a latent robustness in the economy that I don't think, in fact, if you look at GDP volatility, it's like the UK. It's nothing like Russia or like Brazil, which are 2 or 3 times more volatile than we are. And then finally, maybe in the context of helping build Africa, the relevance of our economy is remarkable. It's a big economy. So that 30% growth rate that we may have lost, just that slice of GDP is bigger than, I think, most of African countries' GDP. Our companies are bigger than, their revenue flow is bigger than many of our neighbors. I was mentioning earlier, I hope I can say this, but it's quite remarkable. The trading volume in the JSE is 30 times bigger than Egypt, 180 times bigger than Nigeria. I mean, so our markets are deep. And one statistic, I think, that I hope I'm not boring you with all these numbers, but there's too little data out there. I mean, that's part of the problem. And the one number I think is amazing is 82% of the continent's pension assets are in South Africa. So there's a mature system of retirement saving, and that saving being available to fund growth. So, you know, I hope I don't sound like, you know, a fool. I just may be making the point that when you look at the data and you strip away all the bias, the country has remarkable potential. And again, under our President and the plans that he has, I am very, very optimistic and excited to invest.
Bridget,
BM point of view, our investment in South Africa would really key on 3 elements, and skills really underpins a lot of the 3 elements that have made South Africa such an important and relevant investment to us. The first is around flexibility, around the focus on Black economic empowerment, and working with the Department of Trade and Industry with Rob's team, we have found a lot of flexibility, which has been really important to us. Our view on investment in South Africa and a market we go into is there needs to be skills to deploy technology and build technology solutions institutions because the economy will get a lot of leverage. And Rob's team worked hard with us. We've now got a BE rating of 1 to help us bring finance and investment in to support skills development. So we only have 12 research labs in the entire world for IBM. South Africa's is the 12th, in Braamfontein, and that would not have happened without this. And a research lab for us is huge. We have cancer research going on in South Africa, square kilometer array, and aspects such as where to place solar panels for every person in South Africa to figure out where they can place a solar panel if they so need. We also invest in skills for startups to facilitate startups and bursaries and ICT training, especially through a program we've started called Digital Native Africa, a new Africa, which is around how we are taking digital skills and enabling and opening skills training to everybody. We have an MOU with the government, and it means people can access free skills training. So that flexibility of investment in skills for us is critically important. The other thing I would say, and perhaps we'll talk about it later, is the digital world where artificial intelligence is going to mean that the world we're in has hyper-personalized farming, hyper-personalized mining, hyper-personalized consumption behavior, means that the skills for technology need to be in all of our people. And South Africa has a real opportunity here. There are many education models of combining associate's degrees and high school degrees that we've been experimenting in the US and Australia, which I believe are applicable. So I think a real focus we would like to bring is public-private partnership around new education models. And the final area I would focus on for South Africa is around trust. I know that you've all talked about the breakdown of trust here, but part of Davos and 4.0 is we've talked a lot at Davos about trust as an issue around the world. The Edelman Trust Index says that trust in institutions and governments is at an all-time low across the world. And so everywhere around the world there's a rebuilding of trust, and I believe a lot of that is collaboration between what you are doing, open dialogue and collaboration between public-private partnerships and the community. So our investment really, when I take a step back for our business as an investor in South Africa, is we've really got two things, where we can create great digital skills for a new era and a large market that can actually leverage digital solutions to build new business models can be a real economic multiplier for us. And we really do see that in South Africa.
Let's stay on the issue of perception, Minister. We know that don't get skittish with some of the bad news that will come out and with some of the rhetoric that will come out.
Well, I should perhaps have declared an interest. And Zinga and my daughter are friends since school, but that doesn't mean that she's just asking me easy questions. But just before I get there, because I think there's a very important point that Bridget made. Black economic empowerment is what we ask investors to contribute to. And actually IBM was in many ways the trailblazer because they don't do share transactions outside of their own jurisdiction. So there's this thing called equity equivalence. Now, you can go to people in South Africa who will tell you that, you have to do the moon and it's going to be difficult. But what we did in our division, the BE division, was to work with them, find a way that they could contribute and end up with a win-win outcome. So as Bridget said, we wouldn't have had that research center if it hadn't been for the BE program. And we followed that through with, we just mentioned a couple of others, Caterpillar, and more recently with Amazon Web Services. So our message is to everybody is when it comes to BE, we offer a service that you can access through the one-stop investment shop that will help you to find a deal that will end up being, we'll find out what is your business, what do you do, how can you contribute in meaningful ways that you will empower people, black people, to become not sort of your public relations arm or to have a few shares in your company, but actually to become real players in the productive economy. That's what we really want to achieve, and I think this was a trailblazer, this IBM one. And then to get back, we're in an age of fake news, populism, and people that make decisions based on sentiment and not what Adrian was talking about, actual data and information. And I think that that's where where I think discourse and politics needs to settle down. I think that we would want to be running an election campaign in which people's records are at stake and in which the direction of change is put before the people of the country. And I think that actually many of those who have chosen to stand on the other pole are finding difficulties in their own organizations as well. So I think that, one of the things that we can offer in South Africa is this thing called political stability. We're not going to end up, let's just be, whatever scenarios may unfold, there are different scenarios. We're not going to end up in a situation in which we're going to have a complete and utter surprise like Brazil or other countries. We're not remotely, our politics is not remotely in that space. And I think that's an element of stability. I don't think any commentators are factoring in such a risk. I think many of our risks are as Maria was saying at the beginning, many of our risks are located in the global economy. That's the reality we're going to have to cope with this year. Growth rates are being downgraded, and once this happens, we tend to see that it's downgraded a little bit now, and then as time rolls on, it'll be more and more and more. And I think we are in a very serious situation. The trade wars are extremely serious. Not just because they are seen ramping up of duties here and there, and that we were affected in this regard, but also because ultimately this is about the battle over mastery of technology, digital technology. My own view on that is to say, well, we don't want to back one master or another. We don't want masters. We want an equitable rollout of the new technologies that we embrace in a creative way that meets our own circumstances and conditions. But it is going to be more tricky. But I think that we have set ourselves on a course in which we are much more robust and better able to weather the external shocks because we'll have less internal shocks.
We've been speaking a lot downstairs. Perhaps then we'll continue the discussion here. Oh, there's a hand that's up there. Someone could please take them a mic.
Hi there. My name is Nick von Christiersen. I'm the head of Africa for
world class, and definitely in certain sectors have a lot to share with the rest of the African continent. Is the South African corporate sector and South African government or South?
Let me start off. I think the first thing I would want to say is that if we just look at our trade, the products. So the African market is incredibly important to us. And of course, South African companies are very significant investors in the rest of the African continent. Now, we are on a journey that is moving actually quite fast. And I think that the significance of that is not just or only that it are providers of quality goods and services to the rest of the continent. We're not necessarily going to be able to compete on the cheapest. We can compete on quality.
I think Team South Africa is very grateful for your presence, for continuing with the leadership that you have demonstrated. Thank you, Dr. Tsepo, for continuing to give the support. And a special thank you to Maria for hosting us this morning and for just putting South Africa on the map on this busy promenade in Davos. And thank you to our panelists for the words of insight. I think just some takeaways from your discussion is how indeed growth continues to be what will take South Africa to the level that it should be, but also the testimonies that you have shared that demonstrate that indeed we can, indeed we are there, and we just need that extra push to take us to another level. And for Minister Davis for continuing to be the enabler, the friend of business that wants to make sure that business thrives in this environment. And Ngu and I don't say it often, but we are old schoolmates. So just like Nzinga and your daughter were at school together, Ngu and I were at school together. And indeed, just demonstrating that. Yeah, no, we do have a high school to. No, I was
Yeah, he's got the crystal award. He's got the crystal.